Hello and welcome everyone to Gold Asset of the Day for the 29th of June 2022, presented by myself, Phil Carr, at the Gold and Silver Club. Now, as we enter into a new week here, we have seen hedge funds and money managers, yet again, they've increased their net long position on gold. So we've seen a 4% increase in net longs from hedge funds and money managers. And with that, each time gold is coming back down, retesting that 1820 zone, we've seen multiple opportunities over the month of June to keep coming in, snipering in at the lows and taking advantage of 2, 3, 4, 500 point breakouts to the upside. We saw it yet again last week. Now the quick 200 points booked there on gold. Not only that, of course, we saw oil prices drop all the way back down to our zones of liquidity on Friday. We sniped it in with our clients at the Gold and Silver Club at 103.85, so $103.85 per barrel, only then to see within 2 days the price break back above $112 per barrel. So of course that means our position is now up over 800 points profit. We also sniped it in to natural gas last week as well. In fact, on Tuesday, banking 500 points profit with our clients on natural gas. But also, I'm sure that many of you have capitalized on platinum. We talked you through it last week, and also on the commodity report, we're waiting for platinum prices to break back below $900 per ounce. We finally saw that on Monday. The price very briefly broke down to $888 per ounce before then catapulting back to $922 per ounce. In fact, many of you reached out that you were able to capitalize on that move off the back of our report. Very fast profits generated on that breakout to the upside there on platinum. We've also taken the opportunity this week to reload into metals at lower prices. So gold, of course, as I noted with you previously, each time we're coming back towards that 1820 zone or lower, very interested in that area of liquidity. Silver, sub $21 per ounce. Platinum back under $900 per ounce, and oil when it gets close to $100 per barrel. All of these zones have provided perfect opportunities to reload over the last week. And of course, this week, you have a very interesting dynamic here. We're getting towards the end of the quarter, the end of the month, and also 6 months through the year, where you're going to see rebalancing of portfolios with a view for fresh capital to come into the market once you transition into the month of July. I would look out for that at the end of the week. On the 1st of July, we're going to be moving into the third quarter of the year. Now, of course, the third quarter of the year is going to present some very big opportunities. Typically, July, August and September, they are some of the biggest months for commodity traders to capitalize on the summer rallies that we get on the metals and the energies. Of course, we're moving into peak driving season in the USA, particularly into this weekend as you have the Independence Day public holiday in the USA. So essentially you get many more drivers on the road in the USA to celebrate with their family and friends over that holiday period. And as such, you see a big uptick in demand for energy prices. We've already seen that with oil breaking out over $8 per barrel since Friday up to now, a trade that we've reloaded in. We currently have 4 trades on oil at the moment, 2 positions on natural gas, several new positions on gold, on silver, and also platinum here as well, to capitalize on this second half of the year. You definitely do not want to miss out. The time to really take action on that is now. The best time to upskill and really capitalize on the current commodity super cycle is as you go into this next quarter to capitalize on the second half of the year. Everything remains the same. We still have inflation running at 40-year highs. Interest rate hikes by central banks around the world are ramping up as we go into the second half of the year. Obviously, the Federal Reserve is leading the move on that by the recent interest rate hike the previous week, 75 basis points interest rate hike. And with that, other central banks around the world are all chasing to catch up. And of course, we're heading into a global recession as well. All of these are going to create the perfect storm for the commodity super cycle. Nothing has fundamentally changed. We still have supply chain issues. Many commodities are still undersupplied, underinvested, and this sets up for the perfect opportunity as we go into the second half of the year to capitalize on this commodity super cycle. Over 27 commodities in the last 12 months, they've increased by double to triple digit gains. When you have equity markets that are currently down 30% in the year, you have Bitcoin, which is down over 70%. Many altcoins are down over 95%. You have foreign currencies, many versus the dollar, have broken down to multi-year lows in 2022. And we're in a bear market for global equities. However, commodities have been the shining light here. They have outperformed every single asset class over 2022. And if you want to take action, now is the right time to reposition yourself for the second half of the year to capitalize massively on the current commodity super cycle. You want to ditch those technical analysis or gimmicky technical indicators because they will not work for you in this environment. You'll just get chopped up all the time. It ends up being death by 1,000 cuts. We don't want that for you. You want to be utilizing much more data, statistics, market intelligence. Have awareness of everything I've just been discussing with you in terms of the current cycle that we're in right now within the commodity super cycle. You want to utilize the daily, the weekly, the monthly, the quarterly cycles for each commodity. Learn those. Be aware of the intermarket correlations, the ratios in the market, the key areas of liquidity that I've been talking you through, especially on the metals over the last week where there's been many opportunities to sniper in nice and low, capitalize on the quick range bound price action that we're seeing at the moment. It's definitely not a buy and hold market right now. It is a trader's market for you to capitalize. Alongside that, you want to be utilizing data, statistics, and of course the ratios in the market, the intermarket correlations. Capital flows in the market are very important to understand the relevant cycles, and alongside that, how the hedge funds, money managers, banks, and institutions are positioned in the market. That will help you massively with your edge. So of course, if you would like to capitalize on the current commodity super cycle, take action now. Join our community of successful traders. Learn the research-driven approach to the market and join our professional mentorship program. There is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.